Yeah, go for it.
Cool. All right. So, firstly, hello everybody. I hope all of you are doing well. See, the merge has been underway for I think a little over a week now, so it looks like people are getting results and stuff ready, which is nice. Yeah. Again, I hope everyone's had a pretty decent kind of few days. Obviously, I was away last week, so I wasn't in the Zoom, but I've obviously been keeping track and stuff. And then obviously this week has been probably one of the most busiest weeks, if not the busiest week of the year in terms of just business stuff, because when you go on holiday, as some of you may know, it just puts you behind a whole week ahead of work, especially skiing. So it's been a bit mad. But I managed to squeeze a few trades in. I'm going to be honest with you, this was probably one of my worst weeks. I had this trade, which was missed. I had this drill, and then I had this loss over here, which I'll talk you through in a minute. And then I had this win here. So it wasn't like packs of trades because I didn't want to be trading during the, hold on, let's take my jacket off. I didn't want to be trading during kind of a busy period. So I didn't manage to get that much in, but it was still pretty decent. Anyway, let's go through it, right? So this was the first one, which was March 25th, which was Monday off the top of my head. And it originated kind of with this. So obviously price had a big move to the upside, kind of like London time. And I've kind of spoken about during like a London session going into New York, I like to see kind of, if there's strong kind of just consistent movement to one direction, whether that be down or up, it's usually going to keep doing that until like the overlap or into kind of like going into New York, and could potentially do that up until the end of London as well. But a lot of the time you see it from say 8 till about your 1 p.m. So I didn't actually want to take this trade, hence why I put here, this is not a valid trade to me. Guess why? So the one reason being is it's kind of approaching that end point. And after seeing something like this, kind of like an overstretched move at that point in time in the day, I don't like to get in personally. If this was like 9 a.m., potentially I would have, but that's not the only reason why I didn't want to take it as well. Obviously, one, we're kind of overextended here, so we're heavy in a premium from this point to potentially this point. If that obviously breaks there, we'd have that as our point. And also as well, on the last three pushes up, so we had push up here, and then we had another push, but wasn't kind of as significant as say these breaks you're seeing here. It's a very light push. We come up above the high, come straight back down, come up above the high again very slightly, then come straight back down. So to me, that I didn't want to kind of risk taking that. However, it did end up working over here, right? But this is just a prime example of where, I could have taken that risk, because on a kind of like micro scale, internal and external viewpoint, technically it's valid, right? But just with the whole kind of time side of things, with the overextended move, with the kind of not so higher highs being printed, I didn't want to take that, just because I knew if I did take that and I did hit my stop, I would have definitely known why, and it would have just been a complete breach of my rules. So I didn't decide to take that. Hence why I did put that text on here originally. And I obviously just wanted to use this as a case study, which I'm obviously doing on the Zoom now. So that was the reason. But yes, this did trade up. And I think trade up a bit more before potentially falling, but it wasn't my cup of tea personally, and I just decided to stay out of that. But arguably, yeah, you could say it's still valid, but it's not worth the risk in my opinion. So that was the first one. Obviously, I didn't take that, so you could argue that's a drill. Second of all was this GU trade, and again, I think on an external basis, it's bearish on a higher time frame. This is the M1 kind of looking here, and I was anticipating to potentially see some form of this movement going into London. See, we have the London Open here, and I was kind of making the prediction, which isn't always the best idea, but kind of just making the assumption more like that this was taking the low, mitigating POIs, breaking these points of structure here as well, OFD as well here, reaction, and then breaking in order for this to go higher. And I was targeting this high, so I didn't want to be targeting anything too far on the left. But but we did end up, unfortunately, not having a reaction from this POI over here, and we didn't obviously convert higher, so we had the failure to convert. We kind of came down, came back up, grabbed that high, because that was kind of like the last chance for this to potentially then go higher, but we did fail to do that, and we mitigated this POI before going lower. So what you could take from that, and what I took from this was a push up into something higher time frame, see, to coincide with the external bearish. And as you can see here, it's kind of like an overstretched move, and it's usually followed by that type of like candle movement and wick. So if you go onto the 5 minute, this would just be like a big fat wick there, and then the trend kind of decides to change internally bearish, and there was no kind of real true transition for this to be bullish. I guess the real kind of foreshadower would have been this, but even after that, this could have still broken like this. That could have been a potential CBOS into high to low to high here. But again, I don't want to say it was a mistake on my half. I think it was just not taking into account this characteristic. And I do want to say I followed my rules, because obviously I was following the internal kind of micro time frame structure, and I was looking for a micro trade, and I didn't manage to obviously get into that. Well, I didn't take this at all due to the time. This was the drill. This is the loss I did, but I would have wanted something like that over here. So yeah, that unfortunately lost for the reasons that obviously I mentioned.
Do you mind if I interrupt you a bit? Go back to the other one. So I would say the mistake here is kind of, I would say it's more like a bad timing thing. I guess CBOS, low into high, low into high, low into high. We have a low that's break of structure solidified. Then we have unwillingness, break of structure.
There you go, yeah.
So that's like a transition from bullish to bearish. So now that this creates a new structural range, you technically have a high into a low. So even though you're externally still bullish, there's an internally failed reaction. So if we're looking at this from an order flow POV, we have the final buy to sell that caused the break of the break of structure / to take liquidity. So if anything, this order flow has to either be disrupted, or there has to be a structural disruption to then continue higher. So you would need a transition.
Yeah, it makes sense. I didn't even take that into account. Yeah, that makes total sense. Nice. So yeah. Anyway, so that was that trade. I'll go on to the loss I took now. So I think this was, again, just a bit of a sloppy trade in my opinion. I think as well, I was looking at it from a more micro standpoint here. And we had this minor intraday unwillingness. So we had price push down, push up here, and then we had a higher low in comparison to that. And price had taken that high. So it was a potential for price to then go higher. But I had my target as the POI over here. I should have actually had that. And this is purely because the major intraday was bearish from this perspective. So I didn't want to kind of target the high, because I'm assuming if I did obviously target this high, I would be assuming that price is going to continue going higher, and I'm going against the major intraday structure, which isn't the best decision to make. So that's why I was targeting obviously this POI here. We had price push up. Now this is quite interesting, right? Because I've seen some mixed things, and I like to sometimes keep my entry if a lower high has been printed. Sorry, if a high has been printed higher than where I'm entering, right? Because we always can consider the possibility of something like this happening. Yes, it makes it higher risk, because we're basically banking on the fact that this is basically an assumption. I can't remember the word, but it's an assumption that this is going to be a CBOS before going higher, rather than a BOS transition and then lower. So I was still kind of banking on this fact, and I stand by that. It was the risk I was willing to take. I had my stop below this very minor invalidation point here, and we also had this micro unwillingness from this perspective as well. Just the same thing here on the major, on the minor intraday. So I thought, okay, cool. If we've had kind of the same thing occur on this time frame, potentially we could get the same thing occur on the M1 as well. And again, like I said, I'm not being too unrealistic with my target. I'm targeting the bearish POI because I'm not anticipating this to go a hell of a lot higher, just trying to catch that move. And what happened is price did come in, we reacted off the POI, and we did break this high. And that, to me, was reasonable cause to move my stop to this low, because we had low, high, unwillingness again, and then the break. So we could potentially get a CBOS here, mitigation potentially of the SC before then going higher. But as you can see, price failed to do that, and we just broke through. So instead of losing 1%, the trade was managed correctly. I lost 0.2%, which isn't, it's definitely, it's obviously 5 times smaller than the original 1% risk that was taken. But again, it was just unfortunate, and we did hit this region, so that's understandable. And price just melted after that. So thank God for the trade management there. But I think, again, it was just a forced kind of opposing this rule as well. C over R, sorry. And it was a risk I was willing to take, like I said, but that's where the losses occur. I think it's pretty straightforward. Does everyone understand? Is everyone with me so far? Yeah, cool. It's not all sunshines and rainbows. Mistakes are still made. And that's that. Cool. So in this one, I was actually following the trend. And we had, obviously on the M15, price clearly bearish, right? And coming in, obviously London, we had a nice push up over here, say from around there, 6, 7, 8, 8:30 to 9 to about, it was like the overlap, we had the push, and then we had this transition here. Fucking hell, sorry. Right, we had this potential LG reversal down. And I saw this move as a failure to continue higher. And then we had a smaller transition within here. We had the grab of this high and then a strong move down. So that being said, this being the high, this being the low, potentially, or it could continue a bit lower and then come higher. That is the entry point there. The entry is based on this. I think personally, I should have taken into account the whole kind of POI here, because what actually did end up happening, I did have this drawn, but I refined it, as you can see here, from there to there. And I did refine it here. But I do think, just for the sake of not missing the trade, I should have had it drawn from there. So that was a mistake on my end. But price did come up into that POI and then react. But again, following the same principles from that other trade, assuming that this is going to be a grab of the high before reversal, that's what happened. So the entry was still in, price came in, tapped, reacted, failed to break, which is fine. And then price pushed up, invalidation on a micro sense is still intact. And then we broke the low. So as soon as that low was broken, I moved my stop to this high, because if that breaks, then correct me if I'm wrong, Fredo, that's SD.
Yes, that would be unwillingness based on the turno as well.
Yeah. And I think obviously if that then broke, then my stop would obviously more than likely be hit. And we also see as well, that was just a full mitigation of this high to this low on that SC here as well. Okay, so the stop placement was pretty perfect in that sense. And obviously we had that break, and then shortly after, price actually did reverse higher, but we didn't come to that high, and then we came back lower. So if I'd moved my stop to break even, I would have lost, I would have lost out on the profit. Granted as well, yes, if this came up higher, then I would have made the loss. But because I stuck to the SL rules, plain and simply, I wasn't stopped at a break even, which might have happened maybe 2-3 years ago. And I would have lost out on that 2.86%, whatever it was over here. Right. So that was literally, they were the only trades and drills that I took that week. It's been extremely busy. But there's not been kind of anything else. And my target was this low, this POI here, purely for the fact that, yes, we are externally bearish. But again, I don't want to risk potentially losing out targeting this low, maybe for an extra percentage, when this could potentially internally carry on being bullish and then go higher. Because this could have just been a CBOS lower, and then they move higher. And I didn't want to take that risk. And I knew that this POI could have some reactivity to it. So I thought I'd rather come out with the profit that I made than try and make an extra percent just because I'm targeting the low here. And yeah, that was it for me. I'm trying to think if there's anything else. Has anyone got any questions or anything? Whilst you think, I'm just going to pull up BTC.
Can't see that.
Yeah, I'm just pulling it now. Hold on. Give me a second. Hold on. Okay. Right. So regarding BTC, I think it was about, let's say, kind of like mid of the month. We had, I think I spoke about this on one of the previous Zooms, but we had this, right? We had, see, price push down, have a reaction, and then we break, right? So OFD here, and basically, if this low broke, I think that would have been a nice kind of move down into the early 50s, potentially even lower. But I just don't think crypto wants to come lower. And I think we were discussing this, I think it was the last Zoom that I was in, which was 2 weeks ago. We were kind of just identifying there's no real reason for this to stop going higher. I think this was definitely premise for a more discounted region on BTC. This kind of stimulated that whole thing, which is fair enough. But yeah, I don't think this is going to continue going lower at all. I mean, we won't truly know until that breaks, but that was my kind of, this is my point here. I sent it in the Discord. I think it was Monday last week, but we just haven't had that. I think we came a bit lower and then we just, unwillingness here, push higher. Price just seems to continue to go higher. So we'll see what happens with that. So I'll keep you updated. I definitely, well, not financial advice, obviously, but I definitely recommend checking out LCX, Cosmos Atom. Jasmine is actually quite good. This I mentioned the other day that I was looking at this as a kind of just like a random buy, but I think the project behind it's quite good. So I'd recommend checking that out. Aventus, Quant, of course, and Quorium's good. These are all pretty decent projects. And obviously VET I've been speaking about for God knows how long. VeChain. Yeah, we're at 4 cent. I remember those of you that were in the Wick or Treat days, like back like ages ago, back in 2019, 2020, we were talking about all these coins and we were talking about VeChain. And I remember it was I think it was like, it must have been, it was like 2 cent or something like that, or even lower. It was like lockdown time. Lockdown. Oh yeah, it was 0.02, right? This would, because this project is great. I mean, I'm not too involved in the whole thing. I don't know how they've changed, but back when we were looking at it back then, the solutions they had for supply chains was just phenomenal. And this growth, and I know a lot of guys got into it back in the day when we were speaking about it. 10,000%, unheard of. Same with XRP, 0.015. Yeah. XRP as well. This has just been, obviously, we bought in back in 2020 when we saw an accumulation occurring, or a reaccumulation, or whatever it was. It was something around here. The 15 cent. Obviously, I still believe in XRP very much as a project, but it's just taking its sweet time. But I do think there is definitely room for this growth. I think as a project as a whole, you guys who have known me for 5-6 years plus, you'll know how bullish I've been on this since. And back when the SEC slapped them with the lawsuit, that was the time to fucking load your bags. And we sold kind of early 2021 time. So yeah, I think we sold before the 2 or right after the 2. It's kind of like around here, the 1.5s. So yeah, it was a good little call. The thing is, right, obviously, because these are long-term projects, they're not, I'm not looking to buy these for a couple of weeks or a month or so. I think from a long-term perspective, it's more about the backing behind the actual project, the goals behind the project. What are they fixing on a large scale? Obviously, XRP, payment solutions, VeChain, supply chain solutions, the whole lot. And if there's a true problem being fixed, then they can back it up, not just saying it. Because you see a lot of these shit coins that come out saying, oh, we're aiming to do this, this, and that. And obviously they're around for about 2 weeks. They pump 3,000% and then they die. Obviously, you need to look in to see if there's actual backing and proof of concept behind their message and behind their mission. And if you're somebody who wants to just start looking in cryptos, the best thing I would say, if you know nothing about them, right, go onto a website, CoinMarketCap, and I would suggest look through the top 200 coins, and I would just pick them out, go through their white paper or whatever you want to do. If you can't be asked to read it, if you use AI, which I'm assuming most of you do, basically what you want to do, copy and paste all the info that you have about it, and then just put it into AI and say, summarize this, write for and against why it's a good project, So you do your technicals on the charts, and you will be able to see if it's a good project or not based on that. But if it's something you believe in and you think, there's room for growth for the actual project, then definitely go ahead and consider playing around with it. But I know a lot of people say crypto's dead, XYZ, but they were saying that 2 years ago, 3 years ago, 4 years ago, 5 years ago, and it continues to surprise people, right? So that's all I'm saying. I'm very bullish on it as a whole and just in the future in general. And I think it will definitely be revolutionary if it hasn't been already, basically. But yeah, that's my stance on that. I mean, this looks good. To me, it just seems so alien to buy at this price. But again, I feel like it's the best we're going to get potentially before we see something like this. But again, as always, NFA. All-time high for VET, 28. That's about 500% growth, which is still phenomenal in potentially a year or two. But yeah, that's it from me. If you guys have any questions, let me know. FTM, any good? Is that Phantom? You know what? I don't know about this coin, to be honest. But it looks like it's having the exact same price moves as VeChain. Looks pretty much the same. If you know about the use case and you think it's good and they have backing and they've been around for, let's assume a year before this, let's say 6 years, then loaded up FTM 42 cent. Nice. I mean, was that here? Was that down here? Or was that in 2020, 2021 time? February, nice. Nice job. Do you know the use case behind it? Not much. Fair enough. Yeah, it makes sense. I mean, I always believe that. I think on this kind of scale, if you're seeing an accumulation or a distribution, depending on where the market is, it's definitely a indication for you to get in. It's the same thing we did with XRP back in 2020. I mean, I know this isn't textbook, but it's definitely showing something. But yeah, cool. All right, nice one. I think that's everything. If you guys are all good, I'll pass you over.
Cool.
Yeah, Bimmy, I'll check it out for sure.
All right, can everybody see my screen? Cool. Cool. Let's go ahead and get started then. So, bit of a good week again. I'm starting to, I don't know. I feel like I've kind of been in a type of flow state over the past like 2 weeks, especially with my trading. I just feel like I know exactly what I'm looking for these days, and if I don't see it, then I'm not trading. Like Thursday, I didn't really see anything I liked, so I just ran drills, and same for today because it's Friday, and with the holiday, I was seeing like spreads up to like 4 pips on EURUSD, so wasn't really ideal by any means. But yeah, let's go ahead and get started. First trade, I believe this was Tuesday. Let me actually pull these up. Give me 1 sec. Yep. So first trade, EURUSD, a structural disruption found during my time, or my execution time. Sorry. Right. So whenever I'm following the framework, I'm always, like I said, I'm always looking to find my direction, see where liquidity is swept, and find an execution based on a model. Obviously, here I know that my direction is technically bullish, but we reacted from an external POI. That external POI has a confirmed reaction, and I kind of went over this in the review that I made, or the case study that I made. But this was like an H1 POI, I believe, and after the H1 POI, we had a CBOS because this is the first or the final solidified point or the final low that led into the high, which then reacted from the POI. So after the CBOS, we see, actually, let me mute everybody. Sorry about that. Yep, there we go. So because this is my CBOS, I then noticed that I have a solidified low after this low breaks this high. So I have a solidified low from a low into high into retracement, right? That retracement is confirmed here. So once that retracement low is then taken, then that is a structural disruption. So I now have my direction, right? I anticipate that this is my liquidity that's being swept, not to mention it already happened before as well from a micro stance. But after that liquidity has been swept, then I have my execution based on a model, which is a structural disruption, and I'm aiming at the pretty much the extreme supply here, or the extreme demand, sorry, for the sole reason that the direction was technically bullish. So I don't know if this is just an excuse to then want to go higher. And I believe it went straight through, if I remember correctly. Yeah, it went through, but I'm pretty sure it went completely through as well, even this low. But I like these types of scenarios, mainly because whenever we see, right, that we have a very impulsive move right after your entry is taken, then in my opinion, this just shows that everything I did or my entire analysis was correct from a bias and an execution standpoint. Biased because I got the favored direction and my TP was hit instantly, right? When we're talking about 12 pips in a matter of 1, 2, 3, 4, 5, about 30, let's say 30 minutes, right? Which averaged out to about a 1 to 3. I thought that was very, very good. But on to the next. Oh, this was the full analysis for that EURUSD trade. When we're we're studying both the scalp and the micro. Right, I know that my direction is going up, so my blue is my scalp, and then I note that my micro is broken. And from the micro, we then have two structural ranges being formed, but it's only until a model is present that we can take an execution. If you guys want, this is in my markups channel on the Discord. If you guys want to save this, I think this is a great reference to study from. Well, and yeah, like I said, it actually ended up going through to the external low. Next trade, AUDUSD. This was actually the sweep model that we talked about a couple of weeks ago. I'm probably not going to include that model in the book that I'm making, solely because I haven't tested it enough. Like, I don't have more than, let's say, 100, 150 scenarios with that type of scenario. So I'd rather just not include it. We could just kind of keep it as an exclusive thing for everybody in the Endure group. But essentially, right, what we see with the sweep model is I want to see an unsubstantial new low, right, followed by a type of model / transition so that I can then find an execution into the upside. And that is exactly what happened here. My direction is technically bearish. My pullback has been confirmed. My pullback has not been taken. We had internal unwillingness, but that internal unwillingness failed to become external. So once we have this set of unwillingness then confirmed here, then it's fair to say we're probably going to aim for this low, right? But once we reach an intermediate low, the intermediate low gives an unsubstantial new low, right? Plus there is technically a potential order flow disruption based on the reaction, and we have a move into the upside. So I kind of justified this entire scenario as a potential sweep model, and liquidity has been taken based on the unsubstantial new low, and that then gave me a point of reference with my SL under the solidified low that led into the break of structure, and my target was obviously equal highs here. So how did this result? Right, pretty much an instant TP as well. Very, very nice in my opinion. A great representation of the model that, or the fourth model that I've been telling you guys about for a couple of weeks now. And like the previous scenario, we actually had our entry go straight in TP, no questions asked, as soon as possible. So I thought this was a very, very good trade as well. And I believe in the next image, yeah, we actually dove into the internal here before the execution. So obviously I know that we are technically bearish here. I see that order flow is still technically bearish, but we do have a reaction from a POI, and then that leads into, right, order flow disruption internally. So once the order flow disruption is confirmed, then I now have an internal model supporting the external bias, which is based on this unsubstantial new low, meaning we could potentially see a sweep and then a move in the opposite direction. So my entry was based on this previous structure high, because this is also potentially the final sell to buy move. And my SL is under the under the solidified point present here. So this led into that scenario. Very, very nice, textbook, and a favorable outcome. Next, this was, I believe, my first set of drills. This was a EURUSD, I think yesterday is when it started. Yeah, this was yesterday. So once again, right, looking at my direction is technically bearish, right? Bearish, we are followed by a CBOS, internal unwillingness, and this gives us a move into the upside, right? So therefore, we are technically bullish, low into high, retracement is solidified, and we have an unsubstantial new high. Once this unsubstantial new high then leads to unwillingness, then technically we now have a lower high. Once we have a new lower high, then I think it's fair to assume that because we have swept bullish liquidity here and failed to break this high, then if we're not going to go up, we're more than likely going to pursue bearish liquidity here. And based on that, right, internally, we do have a potential LGC, mainly because the internal direction is technically bearish, and that then led to an LGC internally, which then means that I'm looking for a solidified low, because this is my final low that led into the high that took liquidity, which then led into a bearish engulfing candle. So because that is where my buy to sell move begins, then I'm looking to enter based on that. And then I'm going for external liquidity because it is a lower high based on this. And fortunately, this one, just like the previous, took a bit of time, but either way, TP is TP. And this one was about a 1 to 4. 1 to 4, very, very nice. This one 1 to 3. I don't think I have the other one marked up. Maybe 1 to 4. But either way, favorable outcome, very nice trade as well. And this kind of just emphasizes the whole continuation over reversal. That's kind of something that's kind of been like a staple for the group for, I would say, over a year and a half now. Always focus on continuations. I'm just looking for my excuse to sell in the previous direction shown. All right, so next. Pretty much the same scenario here with GBPUSD, where we had an unsubstantial new high, right? We have a low into high, retracement. Retracement has a sweep. Internally, we break internal structure. But because it's breaking internal structure, this low into this high is still technically bullish. So we have a CBOS. That CBOS leads to, right, a failed bullish reaction, meaning we have structural disruption into the downside now. And based on that structural disruption model, after liquidity has been swept, after we've acknowledged that we are technically bullish, we can now assume that my entry is based on, right, the final buy to sell move, and that final buy to sell move is aiming for external liquidity shown here. Unfortunately, right, let's not straight in the TP, but did take its time. And in terms of management, it's not really anything too complex, right? When we are looking down here, we can't necessarily move our SL just yet because there is no CBOS continuation, right? We have a high, 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 high. We have a CBOS, right? Because technically this is still bullish. But that CBOS led into a structural disruption. So once we have a CBOS continuation, then I can move my invalidation. And then from here, it's once again CBOS followed by a continuation. So my new invalidation. And then from there, it kind of went straight to TP. But overall, very, very good trade. And I will say this was my only loss. I believe it's this next one. Yeah, it's this next one. I was a bit hasty. In my opinion, I was a bit too lackadaisical with acknowledging my external direction. And by that I mean we are technically bullish, right? From an external POV, we have a clear low into a high. So even from a structural standpoint, I should realistically be looking for any type of buys here with the objective of taking this out, just from a structure POV, right? But my justification for this trade was the internal structural disruption that occurred here from a micro sense. I wouldn't say this is from a scalp sense. If this was from a scalp sense, then if we're looking at our scalp range, low into high, then we have to see this high break and then see the low or solidified low break in order to assume a structural disruption, which is kind of how it was with my other pairs, but not with this one. I kind of tried to assume that the internal micro structural disruption would disrupt the entire scalp range. And I was looking at a potential execution to the downside, but unfortunately, this one kind of went straight into SL. But yeah, like I said, it would have made a lot more sense to have either waited for here, or we could have waited for the external reaction because, for example, we do have a POI, we do technically have borderline a reaction, but once that reaction then leads into order flow disruption, then I don't see why it doesn't make sense to not buy here, because we have a double mitigation and you can have your invalidation either at the low or at the low of the POI, and you could be searching for either the immediate target or you could hold a bit longer. But it is what it is. I will say I was just a bit too hasty with wanting to assume that a microstructural disruption was going to disrupt the entire scalp range, but that's just my mistake there. And last one today. This was, I was at the gym this morning and I was just like, you know what, let's see what EU is cooking up, because I had just gotten the alert that GU had hit the TP, which GU you might think of. That's the one that I showed you all. This one had just hit, see, right around 6 a.m. So I was like, you know what, let's see what's going on in the charts this morning. And I kind of saw a scenario, and I can actually break this down for you all here on the chart in a bit. But it was, here's my before and after, came into an SC and then broke straight into TP. I was actually aiming for this move here, and I had actually forgotten that that we had news today, so that's why I was aiming for just a very quick target. This was like a 1 to 2. But yeah, I'd kind of forgotten that there was news today, and I was just assuming that, oh, maybe this could be the move throughout the session. It's not just going to be an instant wipeout, you know, and that's kind of what happened. But yeah, we can go ahead and break that down real quick. So once again, I'm always looking at my daily frame, and then I'm only looking to execute based on my models. So first thing that stuck out to me, was the fact that we had an LG right after we had a sweep of a major low. Why is this a major low? Because this is a very big impulse from, I would say, the major intraday stance. This would be my major intraday structural range, high into low, retracement, continuation, right? And oh, that's actually very interesting. I could have even held this a bit longer, but oh well. But I'm acknowledging that my major intraday low has been swept here, and we have a liquidity grab shown here right after the low has been swept. And let me actually delete this. Let's actually zoom in. And we can very clearly see that there is a final buy to sell push, aka an SC candle present here. So once we see this that is present, we note that internally there have been reactions, and you can see that clearly here. Those reactions then led into order flow disruption. So because we have order flow disruption after a sweep of a major intraday low, then I have a sweep model in play. And I have my perimeter to play off of, which is the final sell to buy move that caused the order flow disruption. So that's why I went just straight with the 30-minute candle, because right after the 30-minute candle, it actually gave an engulfing, and we actually had a inefficiency present as well. So inefficiency close, I had my SL at the low of that sell to buy move, and I was aiming for the previous solidified point present here, as you can see. But I mean, I guess the target was correct because we haven't reached this high yet, but I do see this kind of continuing higher a little bit, especially because we were able to take out some very important sells this week. I mean, some very important lows this week. And we have reacted from an H4 POI. So this could start retracing, you know, a decent bit. But overall, I'm still very, very bullish on DXY. As you guys know, we've kind of been bullish on this for a while. And this will probably continue with the next objective being here. So even if we see some type of pullback, if anything, I'm hoping this kind of gives us a pullback to the point where, you know, we could even see potentially, right, a low be taken, then we have, excuse me, a model in play, and then we finally come up. Or if we just have like a failed bearish continuation here, and then we see some continuations into the next area of liquidity. But yeah, overall, still very, very bullish on this. Have no reason not to be. Especially after the LGC that was present last week, which LGC here, right? So we have low into high, retracement, continuation. So I just hope that we maybe have a failure internally and then this just continues higher. But either way, still very, very bullish on this. And that's pretty much all I got for today. Yeah, I'm still very, very bullish. For the main reason, right, I've iterated this to you guys before, is we have a present high or low that has been solidified from a swing standpoint, right? And we now have, obviously this is a internal reversal move because internally we are technically bearish. We have a pullback, then we have unwillingness. Unwillingness has been confirmed. So we have a higher low, we have unwillingness, and it's now just a matter of anticipating when this is going to continue higher. But yeah, other than that, that's kind of all I got for today. Oh yeah, the DXY didn't move from yesterday. Yeah, you're right. It's a holiday, Good Friday. But yeah, either way, still very, very confident that this is going to continue higher. And who knows, maybe this could even reach previous highs here. But that it's way too early to tell if that's going to happen, if I'm being honest. We would need this break if we wanted to assume that this is the next break. But yeah, other than that, that's kind of all I have for today. Do you guys have any questions, concerns, anything you guys want to look over? You got into that one as well? Yeah, you're talking about the EU trade. Very, very nice. Instant TP as well. But yeah, overall, very good week. Very good week. But yeah, any questions, concerns, guys? Anything you guys want to go over? Give you guys like a minute or two. Cool. No questions, guys? Yeah, no worries. Either way, all the chart work is in the Discord, so if you guys ever want to reference that, it's all there. pretty much for the entire year. I would say there's probably over like 100 charts now. Definitely over 100. Oh, but actually, last thing, I actually forgot that today was March 29th. Q1 is pretty much done now. I think it's the perfect time to kind of reflect and see just kind of what your progress has been over the past 3 months. Have you gotten better? Have you gotten worse? Based on your metrics, have you been winning more in terms of hit rate? Have you been winning more in terms of your risk to reward has been carrying your profitability? What exactly has been going on? What has changed? And what can I change now for Q2? So I think this is an important weekend for you all. If you guys actually take the time to genuinely look back and see what your progress has been, then we can kind of keep that on track. We can keep measuring that. We can note that and then see what happens the next quarter and the quarter after that and then the quarter after that. And then we can go through a full year review, because I did give you guys some spreadsheets so that you can log trades, etc. But I am actually genuinely curious to see if anybody actually stuck through and has everything recorded. And if you don't, and you don't send me journals and you don't see progress, well, hey, there's not much more I can do if I'm being honest. But yeah, definitely take the time this weekend to reflect, measure, and see what has changed, how much has it changed, and what can you change for this upcoming quarter. And if you want to review that with me, definitely just send me a DM and we can go through all of that. But kind of just leaving it off with that. I hope everybody has a great weekend, and I'll see y'all next Friday.